What's up, millennials? Of course, 2020 has been the year of the SPAC market, and also the first couple of months has been pretty good in general, but the last 2 months have been pretty brutal for all the SPACs that we have been owning. So I'm wondering, has the SPAC bubble burst? And the SEC has been taking note as well, because we today are going to be taking a look at a statement of the acting director of a division of the SEC, because there might be a few things that could potentially lead to a decrease in the amount of SPACs that we are going to see in the future. Now, of course, I'm not a financial expert, I'm not a legal expert either, so I'm just going to give you my interpretation of this statement, and then you can use my opinion to construct your own opinion about it. Also, a little shout out to J4Profit on Discord, who has led me to this statement of the SEC. And by the way, if you would like to join our Discord for free, you can join us by going to nesami.com/discord. Then you can leave your name, leave your email address, and you're going to get access to it. Before we hop into the statement of the SEC, I'd like to give you a few facts about the current SPAC market. So, first of all, in 2020, we have seen 247 SPAC IPOs, and they raised in total a little bit more than $75 billion, according to this website. But if we go to another website, we can see that they even raised $83 billion. Now, the interesting thing that we can see over here in this graph is that in the first couple of months in 2021, we have already raised more money in SPACs than in 2020 combined. So $96 billion compared to the $83 billion in 2020, which is quite crazy to me. And also, if we take a look at the SPAC ETF called SPAK, we can definitely see that the SPAC market is selling off a lot. First of all, we had that beautiful rally from November 2020 all the way up to the end of February, and then we saw a sharp decline in the prices of SPACs, and even today we have a pretty red day. So I'm personally wondering if we're going to see a K-shaped recovery in the SPAC market, if the good SPACs are going to continue to go up from now in the next couple of months or so, and the bad SPACs continuing to go down or stay flat maybe. So let's now turn our attention to the SEC to see what they are doing about the current SPAC market. First of all, a few weeks ago on March 25th, we got this message about the SEC looking for information to banks, or they are trying to get some information from banks that are tied to the SPAC market, because they are helping SPACs, especially with the financial side of things. And the SEC is wondering if the banks actually do enough due diligence, if they do enough research with regards to these SPACs, if they look into how the risks are managed, for example. Now, in my opinion, this informal investigation could in the end turn into a more formal investigation. Then let's now look at the public statement that the SEC released a few days ago on April 8th. This was released by John Coates, who is the acting director of the Division of Corporation Finance, which is a division of the SEC. And I kind of liked reading this public statement because I thought that it was quite well balanced. It didn't look only at the negative points, it mainly looked at the negative points, but there were also some positive points. And John Coates here is talking about a few concerns that he has with regards to SPACs. For example, fees. Because, yeah, there are some underwriting fees, as they call them, some banks that require fees to do their own due diligence to help SPACs with the financial side of things. So there are definitely sometimes high fees involved. John Coates also mentions the conflicts, probably the conflicts of interest, at least that's my interpretation, and the sponsor compensation, because the sponsors of a SPAC usually get quite a lot of money for just 2 years of work. They often get like 5% of the deal, and if the company is valued at billions and billions of dollars, then just that 5% of the deal can already be worth tens or even hundreds of millions of dollars, which is a pretty nice pay sum for just 2 years of work. Another concern he mentions is the celebrity sponsorship. Of course, we have seen some popular people getting involved with SPACs. For example, Shaq O'Neal, who went into the FRX SPAC. So when you have these popular people, then it's usually easier to hype up a SPAC instead of just a SPAC that does not have a popular person in it. John Coates also mentions the potential for retail participation drawn by baseless hype. So this is definitely a very negative point, of course. I think this mostly has to do with the fact that most SPACs do not have any revenue. They just have a good story that the retail investors like. And yeah, there's just baseless hype. You can maybe think about Nikola, which was just a hype for a long time last year until it wasn't, of course. And the last concern that is mentioned over here is the sheer amount of capital pouring into these SPACs. And again, I think that there are so many SPACs, so many companies that are basically worth billions of dollars, even if they don't have a business model just yet, even if they only have just pictures on a website or just a nice CGI video in the case of Nikola. And I think the most important question we have to ask ourselves is, what do we actually need in the SPAC market? What has actually needed to change this entire SPAC market? Well, I think John Coates mentions it over here, and he says that we need full disclosure so that the public can make informed investment and voting decisions. Because I think that a lot of times in the SPAC markets, we don't have all the information just yet. We just have the very good information, we are going to make billions of revenue in 2025, that kind of information, but we often don't get all the pieces of information, all the risks that there might be involved with the SPAC. And I think the main point that John Coates is trying to make has to do with projections, with forward-looking statements, with statements like, well, we don't have any revenue just yet, but in 2025 we're going to have like $1 billion or $2 billion or $5 billion in revenue. So from zero to like billions of dollars, that could be considered to be a projection, a future, a forward-looking statement rather. And the interesting thing is that these forward-looking statements are present everywhere in the SPAC market. We, of course, have been doing a lot of SPAC valuation videos, and we are always talking about projections of numbers in 2023, 2024, 2025, whatever. But you don't really see these forward-looking statements, of course, in IPOs, in traditional, conventional IPOs. And why is that? Why don't we see those kind of statements in IPOs, but we do see them in SPAC deals? Because they seem to be relatively similar, right? Well, John Coates says that that probably has to do with the so-called safe harbor of the PSLRA. I'm going to explain that a little bit. I'm going to try to keep it very brief, but the PSLRA is the Private Securities Litigation Reform Act. Let's for now just call that the stock law to make it very, very simple. A stock law. Okay. And within that stock law, we have something called the safe harbor, which basically is a rule that says that certain companies are allowed to make forward-looking statements, are allowed to make projections about the future, but this doesn't apply to traditional conventional IPOs. So IPOs have to be very careful when they talk about the future, when they make projections or forward-looking statements. So this safe harbor does not apply to IPOs, but the question is, does it apply to SPACs? Well, it is unclear. No one really seems to know. In John Coates' words, he says, in simple terms, the PSLRA excludes from its safe harbor initial public offerings, so IPOs, and that phrase may include de-SPAC transactions. So actually, I'm not talking about the SPACs itself, but the de-SPAC companies, the companies that have completed the merger with a SPAC, right? Now, it's really unclear if SPACs are also within that definition of an IPO, of an initial public offering, of course. Because the thing is, the PSLRA, that stock law, again, does not refer to any definition of an IPO. So we don't really know how an IPO is defined, and that means we also don't really know if a SPAC is included within that IPO term. So because it's so unclear whether the SPACs are included within that safe harbor too, many people actually say that legally SPACs can actually make projections about the future without having to be super careful about them, unlike IPOs, which have to be very careful about making forward-looking statements. But John Coates goes on and says that the SPAC world is not entirely the Wild West, because even if the safe harbor does apply to SPACs, even if they are included in that safe harbor of that stock law, well, it doesn't really protect against false or misleading statements. And also, if the SPACs have multiple projections about the future, then they need to share all those projections. So for example, if they have a certain positive projection, they need to share that, but also if they have a negative projection about the future, they also need to share that. And I think that might actually be a problem, because right now in the investor presentations, we are seeing a lot of the positive sides of things, but we don't really see the negative side of things. But my question here is, how are you going to be able to prove, for example, that a SPAC had false or misleading statements? Because let's imagine a situation where a SPAC says, all right, if we are going to say that by 2025, we are going to have $1 billion in revenue. And then we are in 2025, and it turns out they have only $100 million in revenue, for example. So let's say the investors sue the company because they thought it was going to be worth way more. I suppose that the SPACs, the de-SPACed companies, can then just say, yeah, sorry, we thought we were going to get $1 billion in revenue. It just didn't work out this time. So yeah, I'm sorry you lost money, bro. Now you might be saying, okay, that sounds very confusing, all of that. I totally understand that, and I would like to encourage you to read this entire statement because I do think it's interesting to look at, but I do wonder, what is a potential solution to this problem? What could it make more or less confusing in the end, of course? Well, according to the SEC, according to John Coates of the SEC, we should probably be looking into understanding and developing more law. We should have very clear definitions of what is an IPO exactly. What is a de-SPAC transaction exactly? Are these two related? Are these two not related? Should they be under the same umbrella? Should they maybe not be under the same umbrella? Should the SEC, for example, provide greater clarity with regards to de-SPACed companies and with regards to whether de-SPACed companies are included in that safe harbor of that stock law or not? And should the SEC, for example, provide guidance about how to make projections about the future, how to make forward-looking statements? And you might ask yourself, okay, sounds very confusing and maybe interesting at the same time, but why does it matter exactly? What is this going to have for kind of an effect on the SPAC market? Well, if you want my opinion, and of course this is just speculation, I think this is going to lead to more regulation by the SEC. It looks like the SEC thinks that the entire SPAC market is very unclear, very unregulated, and I think that if we are going to see more regulation by the SEC, it is going to be harder to create a SPAC. It's going to be harder to find companies to be able to merge with. It's probably going to be harder to raise billions of dollars for companies that only have like CGI images of a nice looking hydrogen car, for example, Trevor Milton with Nikola, of course. So in short, I think we are going to see fewer SPACs if we do see regulation by the SEC. Now, do I agree with regulation by the SEC? Well, I don't really think it's necessarily needed. I mostly believe in a free market, and above all, I believe in education. And if we go back to this SEC statement from John Coates, what I want to achieve is that people are able to make informed investment and voting decisions. People should have all the information present, not just the bullish information, not just the projections of we are going to go from 0 to $5 billion in revenue in just 5 years' time. We should have all the information, also the negative points, potentially negative points, and not just misleading images or projections. And that informed decision making is something that you can control. What I say in a lot of my SPAC valuation videos is don't trust me, verify me. Because you don't need to just watch one of my videos or videos of other YouTubers, of course, and then see a price target of like $30 and maybe the price is right now at $10 and you're going to buy it immediately and think it's going to go to $30 tomorrow. No, you always need to do your own research so you can make your own informed decision about an investment. Now, I'm really looking forward to your opinion here too, because do you believe, for example, with regards to the SPAC market, that we need more regulation by the SEC, or should we maybe just let the market do its thing? And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!